Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Today guys we will take a look at the Japanese yen, because right now it seems that the Japanese yen will get the strongest impact from the Fed decision. So previously we already have discussed the first signs of the currency war that we see between the European Central Bank, mostly Bank of Japan, and the Fed Reserve. The Bank of England stands a bit aside, not totally involved yet in this turmoil, but European Central Bank, Bank of Japan, and the Fed stands very tight in this struggle. So that's why currently, since yesterday we've got the Japanese yen decision, so they have postponed the tax reform. They haven't taken any significant steps in the further easing in the economy. So they have postponed this since they see that the European Central Bank has taken the steps. Now they would like to see what really will follow from the Fed. What we could expect from the Fed today and tomorrow's session. So the major expectation stands with the next rate hiking in June. So most analysis suggest that Fed will start the preparation of the public opinion to the rate hiking in June, and they gradually should increase the degree of the hawkishness in this statement. So, but recently, we've got the not really good retail sales numbers. Also, the Fed have seen what European Central Bank has done. With this environment, I really think that we could get the diverse surprise on the common Fed meeting. This is just my opinion. I'm not sure that really will happen. Besides, as you know, I do not trade such events as the data releases, Fed meetings. So this for me is just mostly interesting as a perspective. What will happen on the markets and what direction they start to move. And my suggestion is that currently is a really high degree that that Fed will turn on the dovish road in their policy, because it will be mostly the suicide for the Fed in the current environment to raise the rates with the debt burden that the United States have. So and then decrease the strength of the economy, the attractiveness of the United States goods. So this will be it will be a really serious step. So that's why I think that they will also gradually will start to move in the same direction as the European Central Bank and the Bank of Japan, because currently the global economy stands weak. So the common measures that usually are taken by the central bank do not work. So the unprecedented and haven't seen any time previously quantitative easing program wasn't able to trigger the production, wasn't able to trigger the consumption, and at the same pace that it was before the crisis. So that's why I think that the Fed will gradually will step out from their hawkish rhetoric and turn to the road of, let's call it, postponing of the rate hiking on some indefinite term. So that's what I really think would happen soon. From the technical point of view, the Japanese yen is very interesting because as I said, they probably will take the most strong impact on the possible dovish comment on the Japanese yen, and since the Japanese economy stands in a really strong relation to the United States economy, and any dovish comments here could lead to significant strength in the Japanese yen. Technically, guys, we probably could see some signs of the possible downward continuation here. So we know that the Japanese yen stands in a long-term bearish trend, and it suggests even stronger downward action. But in our last weekly research, we said that market has hit the medium-term barrier, that is the weekly support and the weekly oversold, and that's why for some weeks market probably will stand flat. That really has happened. So you can see 3-4 weeks in a row market just stands flat and forming the triangle consolidation. But this is very important pattern that now is forming, and it has clear bearish clear bearish feature. So why? First of all, recall that initially we thought that retracement to the upside will be stronger, and even market has formed here the double repo buy pattern. So that was the confirmation. I will even plant the moving average here, so you will see it. Recall our discussion. So thrust down, we said, take a look, guys, we've got the double repo. It's confirmation of the double repo retracement. Very good starting moment for the double repo. But take a look what has happened later. Market has turned to the flat consolidation. This is not typical for the double repo pattern. This is not the failure, but this doesn't allow us to count on the double repo anymore. And this, let's call it unnatural behavior for the double repo pattern, tells us that the pressure here is rather strong, that holds market from the further upward action. So even on an expectation of the rate hiking in the United States, as you can see, even on the easing of the geopolitical tensions right now, so market stands flat. Also, taking in consideration that this is daily oversold, weekly oversold and weekly fib support, and even on the oversold, you can see that the bounce really mild, so it's really shy bounce compared to the weekly chart. This is the first issue that attracts my attention. Second, guys, here we have the signs of the bearish dynamic pressure. So take a look that market has shift trend bullish, but no upward action has followed. And you can see that market is forming lower tops here. This is the sign of the bearish dynamic pressure. And that sooner or later market should drop lower and at least take out of these lows. But as market right now doesn't stand at the weekly oversold anymore, here we could get the continuation of the bearish trend as well. So this is important. Also, what we have on intraday charts. On intraday charts, guys, still we have some nuance. Take a look at the forward time frame chart. It's a bit complicated at the first glance, but it's not really very sophisticated, and it's just too much swings. It's choppy action recently on the Japanese yen. First of all, here we have some kind of the magnet area, because here we have untouched targets. Here we have monthly pivot point on the March that has been tested yet. The market stands very close to it. And here we have, take a look, A, B, C bottom, 100% extension stands here. Most recent A, B, C bottom, 100% stands around the weekly monthly pivot point again. And take a look, if butterfly will be formed here, this also has extension. It's 127 right here. Probably on the Fed Reserve statement, we will get increasing volatility on the market. That could increase some noise actions on the chart, and maybe particular as the preparation to the Fed statement, market really could show some upward spike and test this area. Okay, but I suggest that this probably will be just some fake break, not quite fake breakout, but just will be some short-term spike for touching the targets, and after that market really could turn to the downside action. Why I think so? We already have seen this previously, guys. Just take a look at the monthly chart on the Great British Pound. I will show you. You will see absolutely the same picture as stands on the daily Japanese yen. I will show you. This is daily Japanese yen. It's just different scale. Here we have daily chart, but on the Great British Pound we will take the monthly chart. Take a look at the monthly Great British Pound. Here's the possible upward action that I'm talking about, but on the forward time frame chart, right? And after that, this market has completed this extension here, some kind of the failure breakout. But in our case, this will be not quite failure breakout. This will be just the touching of the necessary targets. That's just market gravitates to, and then I expect something of that sort. If of course the Fed statement really will be dovish. So, but I have some feeling that it's really should be probably dovish, because just due to the reasons that I just have talked about in the beginning of the video. So let's see, and let's watch what really will happen. So how we could trade this setup? As I said, guys, personally I do not trade the Fed decisions. If you would like to take the short position, you probably should place initial stop definitely above the 1540 area. Why? Because 1540 is also, let's take a look at the daily chart, this is also daily overbought, and that's why market hardly will move above it significantly. So it will be really a significant barrier. When to take this position? Maybe it makes sense to wait a bit, because there's really big difference, big range from the current level to this 1540 area. And if market will start increasing the volatility and jump right to this area, so you could try to do this. But this is really will be doom and gloom action, so it will be really risky. That's why I'm usually avoid the diving in this mess and trying to do something in this just turmoil on the Fed statement. So if you are bullish, in this case you probably better to wait if statement will be hawkish, and if I will be wrong, then you just need to wait for the upward breakout of this out of this range and out of the triangle here. Since market will not move too far, it will find some resistance and start to move retracement, then trying to take the position based on retracement down. That will be most safest way for taking the long position. Well, also you could do the same in the bearish direction. So if you don't want to trying to catch this falling knife or something of that sort in this area, you also could just wait when the market will drop lower, break through this triangle, and take some position on the minor retracement as well. But this entry will be of course interesting and more, let's call it more beautiful from the trading point of view. So this will be just a high degree of the experience if you will be able to do this in this area with the setup that we have discussed. But you first need to get the confirmation that the solution is really dovish, and you should see the closing of the longs position here, and market will over the shorts, and market will drop here to this area to make it possible to trade this setup as we have discussed. So guys, as you can see, it's a bit not really simple, this analysis and this setup, but what do you expect in the Fed solution? So it can't be just simple to trade such events. So, but as I said, even without taking into consideration the Fed overall action here that we've got after the weekly result, after the double repo has been completed, this mostly looks bearish. Maybe market will show this spike, maybe not, but technical picture right now mostly bearish rather than bullish. So let's see what we will get here. It's really will be interesting setup.